Hey, welcome back to my Daily News X. Well, I'm your host, Kramer, and today we're diving into a major issue impacting millions of Americans. We're talking about soaring health insurance costs everywhere. It's all over the medias. So, what's behind the rise? How is it hurting families? And how the Affordable Care Act, aka, is involved? And what you can do to protect yourself and your family. So, stay tuned because this one is very important for you and your family. All right, guys. So health insurance has long been one of the major household expenses. Yes. But in recent years, the increase in premium has become very dramatic. Many families are asking, how much longer can this go on? And what we can do when premiums are no longer affordable? Well, today, we'll break it down so we can understand better the situation and what's happening in this healthcare insurance industry and what are people doing to try to afford these healthcare premiums. So what's causing the premium hikes? Well, there are several key drivers behind the rising cost of health insurance premiums. We're going to mention them one by one for you so you can understand better the situation. Number one, underlying healthcare costs rising. Medical services, hospital stays, and outpatient care, new technologies, and pharmaceuticals are getting all more expensive day by day. For example, a recent article notes that premiums are going up because the cost of each medical service is on the rise, as well as a higher use of care in general. So yeah. Number two reason, insurers anticipating sicker risk pools. When healthy people drop out of the coverage or switch, insurers expect higher average cost, which drives premiums up for everyone else. In the AKA marketplaces, this has been flagged as a concern. It's a big worrisome for the AKA right now. Number three reason, expiration of subsidy support and regulatory shifts. Yes. For those buying coverage on the AKA marketplace, some of the federal premium tax credits and enhanced subsidies have helped reduce costs and set to expire or shrink. So insurers and analysts warn that this will push premiums higher for many. Especially right now, the Congress is talking about this and the Senate, they're trying to pass, after the shutdown, to making sure that it's over and they're able to push, the health insurance to keep working for the families. Number four, employer-based cost increases. Even if employer-sponsored coverage, average premiums are rising. For example, one data set shows that in 2024, the average annual premium for family coverage was $25,572. That's up 7% from previous year, by the way. Number five, geographic, demographic, and plan type variation. So costs vary widely by state, by age of coverage persons, by plan metal tier, for example, bronze, silver, and gold, and by whether the plan is employer-based or individual purchase. In short, rising medical costs plus changes in subsidy and slash regulation and risk pool issues equals to premium spikes. There you have it. Perfect storm. Now, which companies and who's increasing these prices, by the way? Well, I cannot list every single insurance here. I have some broader notes that I'm going to give you to you so you can understand better the situation. Insurers participating in the AKA marketplace plans are feeling rate increases that reflect the factors above. According to a recent article, many marketplace insurers are asking for premium increases in the double digits. Employers are seeing most cost increases for the plans they offer to workers, which means even if your company is covering part of the plan, your share could go up anytime soon. So it's not just one company. The cost pressure is systematic across insurers, employer-sponsored plans, and the marketplace as well. Now, what's happening to the AKA Obamacare? The AKA remains the main law governing the individual marketplace for health insurance in the U.S., just so you know. Here are the relevant points of what's happening. Under the AKA, people don't have employer coverage or Medicaid/Medicare can buy coverage through a marketplace. So you have federal premium tax credits or subsidies help many afford the plans. So that's what it means. However, recent reporting shows that the marketplace premiums are expected to increase sharply in 2026, especially if federal subsidy enhancements expire. One report projects a 26% average premium increase for marketplace plans if subsidies are not extended by Washington by the end of the year. A recent piece noted that premiums for health insurance sold throughout the AKA are soaring because of the expiration of enhanced subsidies at the heart of the government shutdown. The bottom line, if subsidies are reduced or eliminated, many lower and moderate income families could face much higher premiums or drop coverage altogether. So when you hear Obamacare premium hikes, this is really about how marketplace premiums and subsidies actually interplay between each other. That's what it is. Very simple. Now, here comes a really tricky question for you. How much are families paying now for insurance premiums? Let's talk about the numbers so we can understand the situation. They can vary a lot depending on the region, by the way, plan type, subsidies, but here are some recent average. For employer-sponsored family coverage, the average annual premium for family coverage in 2024 was about $25,572. That is roughly $2,130 per month. Now, for non-subsidized individual marketplace, let's think about family of four on plans. For one source, that's roughly $1,500 a month for a family of four. Now, the HSA for America, that's another source. In 2023, the average annual cost for a family of four individual marketplace was about $23,968, just a little bit lower than the other insurance, which is about $1,998 per month. So yes, many families are paying between $1,500 to $2,100 a month, maybe even more, for health insurance premiums alone. This before considering deductibles, co-pays, out-of-pocket cuts. And that's a huge budget item, just so you know. And it takes a portion of your actual, paycheck, believe it or not. So that's what people are struggling because they have become more expensive. And now, when you have to pay your mortgage, your auto insurance, kids, supplies, and your premium is going higher, then you're like, whoa, what's going on, So you have to decide whether you pay your mortgage or you keep paying for your insurance. Now, what can we expect going forward? And can Americans still afford insurance? That's a realistic question. Well, here are some of my thoughts on the future, so we can take a look. If subsidies for marketplace plans are reduced or expire, premiums will likely rise again significantly. Analysts anticipate large hikes. If underlying healthcare costs continue to climb, like pharmacy, specialty care, or new therapies, insurers will push more of those costs into consumers via higher premiums, or higher deductibles, or narrower networks. For many middle-income families, those who don't qualify for big subsidies but don't have very high incomes, affordability will become more challenging for them. Yes, it's coming. With that said, guys, some families may still manage if they choose wisely by selecting lower cost plans or being aware of subsidies and reducing use of expensive non-essential services. But the margin for error is shrinking. The big question here, will coverage drop? If people drop insurance because they can't afford it, that can further destabilize risk pools, believe it or not, and push costs even higher. And still, we may see more people on insurers or under insurance, unfortunately. Yes. In short, yes, insurance is still possible for many Americans, but it will be harder in the years ahead. It requires more planning and pose risk for those with thinner budgets, unfortunately. Now, I have some tips and options for people who are struggling and need to keep some health coverage. I'm going to give you a couple of practical steps you can take if you're worried about premiums and coverage all together. Number one thing you can do is check for eligibility for subsidies. On the AKA marketplace, you may qualify for premium tax credits based on your income and household size. I'm one of those, and I'm on the Obamacare, by the way. Use tools like the Kaiser Family Foundation Subsidy Calculator. Yes, it comes in handy because you can manage to put the amount that you think you can afford, and it gives you a rough estimate of how much actually your premiums will be and how much will be your monthly payment. Very simple. Number two, consider the plan tier trade-offs. Lower premium plans often have higher deductibles or narrower provider networks, just in case you didn't know. So if you're generally healthy, listen to this, healthy, this might be acceptable. If you expect heavy use or higher premium plan, a higher premium plan may save you money in the long run. So in other words, if you don't use it that much, look for a lower cost monthly payment. If you're going to be using it very heavy and you require a lot of premium quality that you're going to be using for your home health insurance plan, then you need to pay that premium gap that you have. And maybe you can combine it with another insurance. I'm just letting you know. Number 3, explore employer coverage. If you or your spouse have a job that offers health insurance, compare what the employer plan costs versus the marketplace. Sometimes group employer coverage is more cost effective. One of them could be actually cheaper, the other one could be more expensive. Oh, either way. Shop around each year. Premiums and plan networks change yearly. Don't normally renew the same plan without reviewing it, especially in the open enrollment period. So compare plans and options. Yes. Before you select and renew the same enrollment, just double check before and see what other insurance are offering. High deductibles and health savings account HSA. If you qualify for a high deductible health plan, HDHP, you may pair it with the HSA, which gives tax advantages and might reduce overall costs if you don't expect heavy use. Combine them, HSA and HSA-DHP. Very simple. Consider state programs, for example, Medicaid and CHIP, if eligible, of course. If your income is low enough, you may qualify for Medicaid or the Children's Health Insurance Program called CHIP in your state, of course, which may offer coverage and low or no cost. I'm one of those that I use kid care for my kids, and they're on the end plan, just to let you know. Control over health costs when you can. Preventive care, staying healthy, managing chronic conditions early may help avoid high-cost interventions later, which, by the way, feed back into your premiums. Just to let you know. Budget realistically. Listen to this. Budget realistically. Understand not just the premium, but the deductible, co-pays, co-insurance, and out-of-pocket maximums. A cheap premium may hide very expensive costs when you use the plan, and that's very true. Because you're gonna be in situations where you wish you would have bought the higher tier monthly payment, like instead of bronze, the platinum, and to cover out certain things. All right, guys, just to sum up and get this done with this podcast. So yes, health insurance premiums are climbing significantly due to multiple structural factors. Families are paying very large amounts, often over $1,500 or more possible. The AKA marketplace is under a lot of pressure, especially if subsidies shrink and the future affordability hangs in the balance, especially in Washington. But you still have options, believe it or not. Know your subsidies, compare plans, and use employer coverage if available. And stay on top of your enrollment period, please. If you listen to this right now and you worry, let me tell you something. You're not alone and you're not powerless. The more informed you are, the better you can make the choice that fits your budget and your health needs. Thanks for listening to my Daily News X. If you found this very helpful, share it with someone who might be stressed out about health insurance costs. We'll be back soon with more on the money, health, and how policy affects everyday's life. Thank you for coming, guys, and have yourself a great day.